Over the last 8 months, I conducted a real-life experiment where I invested £150 every month in my Trading 212 stocks and shares ISA. And at the same time, I also compared my monthly approach to a daily experiment of investing £5 every day in my Trading 212 stocks and shares ISA. And while both approaches resulted in having the same amount invested over the last 8 months, the goal of this experiment was to see whether you would get different results if you were to invest monthly versus daily. So if you're a beginner to invest in and you're not sure which route to pick, then in this video, I'm going to walk you step by step into when this experiment started, the exchange traded fund that I chose to invest in, a comparison of the returns that I've achieved from both approaches, and as part of this video, I will also walk you through the step-by-step process of how you can set up your investing account for both approaches so that you have crystal clarity of how you can get started. Before we go into the details, I just want to note that this video is for educational purposes only and it's not meant to be financial advice. When investing, capital is at risk, so always do your own research before investing. All right, let's dive in. Now, there is a very good reason why I decided to conduct this particular experiment. One of the biggest blockers that stop people from entering the investing world is fear. Particularly the fear of investing even just a few £100s and seeing that suddenly go down the moment you invest. And so one particular solution to this problem is basically taking that amount that you were going to invest every month, so in our case it's £150, and breaking that down to the daily equivalent, which in our case is £5 every day. And that way you have the ability to kind of dip in your toes without having to put £150 all at once if you're not comfortable with that. And as far as I'm aware, I don't think there are any videos out there that compare the two approaches in real life with money invested in the stock market over an extended period of time, and hence this video. Now, this experiment started on the 16th of April 2025. On that particular day, I've set up two Trading 212 pies, one for the £150 a month experiment, and then one for the £5 per day experiment. And don't worry, I'll explain what a pie is, and I'll show you later in this video how you can set up one. And with regards to the exchange traded fund, or short for ETF, that I chose to invest in, I went with an ETF known as the S&P 500. In case you're not familiar with what that is, the S&P 500 is basically a group of the top 500 American companies all in one pot. And what the S&P 500 does is that it tracks the performance of these 500 companies. And the order of those companies is passively managed based on something called a market cap, which is basically how big or how valuable a particular company is. You're most likely gonna be familiar with the companies at the top of the S&P 500, companies like Apple, Amazon, Meta, or previously known as Facebook, and Alphabet, the company behind Google. Anyways, now that we know which ETF we're gonna be investing in, let's go ahead and go to Trading 212 and let me show you step by step how you can invest £150 every month, or the equivalent of £5 every day. Now, once you open the app for the first time, always go at the very top there, as you can see in here, and then check that you are investing in the correct account. So for example, here in the UK, we have access to an account called a stocks and shares ISA. And it's basically a tax efficient account where you can invest up to £20,000 per year, and any returns you get on that £20,000 are tax free. On the other hand, we also have this account right here called the invest account. And this is the normal investing account where you can basically invest unlimited amounts of money. But the downside is if you realize some gains beyond a certain threshold, then you might be liable for capital gains tax. In other words, my friend, if you have not used all of your ISA allowance, it's best to do that first and then worry about the invest account. And so going back to the interface, if you happen to be in the invest account, let me switch to the invest account, and you want to swap to the stocks and shares ISA, then simply you just switch here and click on stocks and shares ISA. And now any investments you make right here will be inside the stocks and shares ISA. Okay, now the next step here is to deposit some funds into the account. Let's say, for example, you have a spare £200 or £300 that you want to deposit into Trading 212. And I just want to clarify, money that you deposit into Trading 212 is not directly invested. It will just be sitting there as cash. And it's only when you execute an investing order, which I'll show you how to do in a minute, that the money becomes invested. All right, and so to deposit funds into Trading 212, it's fairly simple. All you have to do is just go down to that hamburger menu at the very bottom, click on that, and then here you just click on deposit funds right here. And now you can enter the amount that you want to deposit. I would love to show you an example of how you can deposit money, but unfortunately I've already maxed my ISA allowance, and if I try to deposit some money, let's say £200, and do that, I think Trading212 will start shouting at me. There probably are worse problems to have in life. Anyways, the process of linking your bank account and depositing some money is fairly straightforward, to be honest, so I highly doubt that you'll come across any issues. The other thing that you can do if you just opened a Trading212 account and you've deposited a minimum of £1, as little as £1 would be enough to claim this, is if you go onto the hamburger menu again and just scroll down a little bit until you see this use promo code section. So click on that, and then in here, enter the code ISMAIL, ISMAIL. And if you do that, you'll be able to get a free fractional share worth up to £100, which is basically free money that you can use to get started with investing. Okay, now let's set up our investments. So here we are back to the main interface. Just go down and click on that pie icon here at the very bottom. Once you're here, you'll be able to see your stocks and shares ISA. So just scroll down a little bit until you see this new pie icon right here. So click on that, and this will allow you to build your investing pie. And just to help you understand, a pie is basically a feature where you can group multiple investments in one place. And it's also a great feature that allows you to automatically invest frequently into your chosen investment, which is why we are choosing to invest under a pie. Now, just click on Add Instruments down here, and then that will get you to the page where you get to choose which funds you want to invest in. And in our case, we want to invest in the S&P 500, so I'm going to search for the S&P 500. And as you can see, there are multiple S&P 500 options from different providers. To keep things simple, I'm just going to go with the Vanguard S&P 500 option. And as you can see, for the Vanguard option, there are basically two sub-options. The first one is the Vanguard S&P 500 ACC, which stands for accumulating. And then the second one is the Vanguard S&P 500 option, distributing option. And just to help you understand the difference between the two, the accumulating option is basically the option that reinvests any dividends that you receive back into the fund automatically. So basically the fund manager does that for you. Whereas the distributing option pays back the dividends to you personally, and then you get to choose whether you want to reinvest them back into the fund or keep them for yourself. In my case, I'm just going to pick the accumulating option. So let's hit add to pie. And once we do that, just click on the next arrow down here. And as you can see, we have 100% allocation to the Vanguard S&P 500, which is exactly what we want. So I'm just going to click on next. And then right here in this page, you get to choose whether you want to invest manually or automatically into that pie. The beautiful thing about the auto invest feature is that you don't have to worry about forgetting to invest on a particular day or a particular month. Trading212 does that for you automatically, which is going to be based on the schedule that you choose. And we're going to get to choose that in the next phase. So in here, just click on next. And now we get to choose the investing amount and the investing schedule. Let's start with the £150 per month option. So to do that, I'm just going to set this to £150. There we go. So that will be our initial deposit. And then on the schedule here, we already have monthly selected. So I'm just going to keep that. And then on the reoccurring investments, I'm just going to put £150 again. There we go. And then for years, I'm going to keep that as 5 years for now. We can always change that later very easily. And once you do that, you can click on next right here and then name the pie accordingly. So let's give this a name and then click on next. And that's it basically. All you have to do right here is click on Fund Pie, and that will ask you to link the funds that you've deposited to Trading212 to this pie. And now Trading212 will automatically invest £150 into this pie. Right, now let's say that you're still not comfortable with investing £150 all in one go, and instead you want to break it down to the daily equivalent, which is £5 a day. Investing £5 a day is the same as investing £150 every month. But it might feel less scary if you're still new and you're still not comfortable with investing hundreds of pounds all at once. And to do that, it's super simple. So let's go back to Trading212, and right here, I'm just going to click on back and reverse. And when I go back to this screen right here, all I have to do is just change the initial deposit to £5, and then also change the reoccurring deposit to £5. And then here, just click on this little drop down arrow, which specifies the frequency of investing. And right now it's set to monthly. So all you have to do is just scroll a little bit to the left and click on daily and click update. Now we will invest £5 per day. So just click on next and then rename the pie to something appropriate. I'm just going to name it £5 a day pie. And here we are back to the final screen as earlier. And now from this point onward, all you have to do is basically sit, relax, and let time do its thing. But because I already started this experiment 8 months ago, I did let time do its thing. So let's actually have a look at the results that I've achieved for the £150 per month experiment, and then for the £5 per day experiment after 8 months. Starting with the £150 experiment, as I've mentioned, I've invested this amount for 8 months. So the total invested is 150 times 8, equals £1,200. And at the time of recording this video, the value of this particular pie is £1,328, which is equivalent to a gain of £128 or a rough return of 10.7%. On the other hand, for the £5 per day experiment, the total amount invested is £5 times 240, which is roughly 8 months, equals, again, £1,200. And at the time of recording, the value of this particular pie is £1,310, which is a gain of about £110 or roughly 10% return. So as you can see, the conclusion we can draw is that the outcome is pretty much the same. The monthly investing approach is just a tiny bit ahead of the daily approach. And that's expected because the S&P 500 has done really well over the last 8 months. And naturally, when you have more money invested up front while the market is going up, then you get more returns. And in this case, we do have money invested up front in the monthly approach in comparison to the daily approach. However, if this experiment were to have gone the other way around, aka the market was going down over the last 8 months, then we would have seen that the value of the monthly portfolio would have been lower in comparison to the daily portfolio. Because the opposite is also true. When you have more money invested up front while the market is going down, the negative returns that you see will be greater. But the thing to note is that all of these ups and downs, over time, they average each other out. And over the long run, as you saw from the results of this experiment, it does not really matter which route you pick. Both approaches will likely lead you to the same outcome. The question in this case becomes less about which one makes you more money and more about which one you are comfortable with. As I've said earlier, if you are new and you're still not comfortable and a little bit scared about investing hundreds of pounds all at once, then maybe the daily approach is a good way to start with. And perhaps once you are used to investing, switching to a monthly contribution to keep things simple might make more sense. And by the way, if you do wish to stay updated with the results of this experiment over an even longer period of time, then be sure to subscribe to the channel. And if you are interested, I am also planning to launch a UK community for UK investors very soon. A place where you'll be around people who are on the same path as you, and it's an opportunity for you to ask questions and benefit from educational topics like these. So if you are interested, then there is a waiting list that you can join by scanning this QR code right here on screen or by clicking the link in the description below. In the meantime, have a great day.